Monday, July 25th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how the Federal Reserve is breaking its promise to unwind its balance sheet, or to QT as it's called. And we've got proof, of course, concrete proof, just like we had last week, concrete proof that the Bank of England has fudged the inflation data. If you haven't seen the video, I'm going to put it up in the cards and in the description. And I even wrote about it in my blog, monaco64.net. I'll put a link to that article as well in the description. So it looks like the central bankers are resorting to lying. Well, I don't even need to do that. I know it's a strong word, but I mean, it's out in plain sight. When investors start to realize that, mainstream investors, by that, I mean by that, I think the faith and confidence in the system is going to evaporate very quickly, and it can happen very quickly. I think faith and confidence is something that is precious, that they've had for many years, but now they're resorting to breaking promises, to lying about things. Even the ECB, of course, as well. They've raised rates, but at the same time, they're saying we're prepared to do unlimited QE or TPI to help Italy. So we're going to look at that today, and we'll focus on the Fed. Before I start, I like to correct something I said yesterday on my live stream. Someone asked me a question, has your watch performed better than gold? And that's a Rolex Explorer 2. And I bought this in 2003 for just over £2,000. And I guess I could probably easily sell it for £7,000 to £8,000. So it's gone up about 3.5-4 times. And I've kept, of course, the box and papers. You need to keep the box and papers. You might not get as much if you don't keep the box and papers. And I remember very well, around the same time, you could buy a sovereign for just over £50. And right now, you need about £350, £370, sometimes even 400 to buy a sovereign. So gold has gone up 7 times in gold terms. So it's outperformed my watch two times, really, because this has gone up about 3.5 times, and gold has gone up about 7 times in terms of British pounds. I think I did the right calculations yesterday. I told you how much they went up by, but I said they went up the same, but they didn't. Gold outperformed my watch. The other thing I said is things like watches are not as liquid. If I wanted to dispose of this, it would probably take a while to sell it. There are good places in the UK where you can sell these, like watchfinder.co.uk. They're a pretty good company, and you have to look around as well. And I'm now not planning to sell my watch. So yeah, just wanted to correct that. If you have watched my live stream and you thought, oh, what's he talking about? Or if you watch it and, if you plan to watch it, so just correct that. So I saw a tweet the other day, and I'll show it to you, from this guy here, Nirnay Patil. And I think it was in response to Sven Henrik, Northman trader, who's quite popular on Twitter. He said, hi, Steve Leisman. As the Fed will hike above the historic trend below this week, could you ask Powell on Wednesday how the Fed can possibly justify no recession as their base case and not in any of their forecasts, while already deteriorating economic data supports the chart below? Yes, the Fed FOMC meeting starts tomorrow. The decision will be on Wednesday. And on Thursday, we get advanced second quarter GDP as well. That's expected. I think right now, investing.com, the people they survey, the people they get their data from, they're usually economists for the major banks. They're calling it at 0.4, which is almost zero, of course. The previous first quarter, GDP shrunk by 1.6%. The Atlanta Fed, I think they see it at minus 1.6. So it would be 2 quarters of negative growth. I mean, that is the definition of a recession. So either, as I said in the beginning of this video, they're starting to lie, or they're starting to lie to the public. It's only people like us who see this, because we look into it. I mean, the general public, they don't even listen, of course, to what Jay Powell says, but the mainstream media, they repeat what Powell says. So they don't do any forensic work. So yeah, it will be interesting to see where the GDP comes. It will be interesting to see whether the Fed does 75 basis points or 1%. According to the expectation here, the market expects 75. So I think it's going to be the last. And so this guy, let's get back to the tweet. He replied, the better question for Steve to ask is probably why a $47.5 billion reduction target is not hit. The Fed lied about inflation, now about QT, and yes, they are lying about recession too, but not raising rates and caving for market isn't good enough. Steve, ask where 95 billion reduction in June and July. And I wasn't too sure what the plan for the Fed was in terms of QT. So I looked it up this morning, and this guy is right, Nirnay Patil, because there's an article here from May 4th. It says Fed lifts rates by half point, starts balance sheet reduction June 1st. So we won't go through the whole article, but I highlighted here the balance sheet reduction section of the article. It says the statement said the Fed's balance sheet, which soared to about 9 trillion as the central bank tried to shelter the economy from the pandemic, would be allowed to decline by 47.5 billion per month in June, July, and August, and by 95 billion per month starting in September. Policymakers did not issue fresh economic projection after this week's meeting, but data since their last gathering in March have given no definitive sense that inflation, wage growth, or a torrid pace of hiring had begun to slow. But it has shown that the economy is actually contracting. I wouldn't believe the hiring numbers that much. Labor participation has gone down the tank as well. So let's look at the proof here. As that guy said in his tweet, they're lying. I hate to use that word, especially when you publish stuff on YouTube. You got to be careful with it. I said they're breaking their promise. So yeah, I think that's a better way to say it. They're breaking their promise. So if you go to June 1st and they said they're going to start selling or letting 47.5 billion come off their balance sheet, they might not necessarily have to sell the whole thing. It could be treasuries that mature, and instead of buying new ones, they just let it roll off the balance sheet, and they just destroy the cash. The reserve. They'll just eliminate those reserves. So we were June 1st at 8,915 thousand million. So, yeah, that's a trillion. That's so many zeros, right? So 8.915 trillion June 1st. They should have done 45 in June. And I guess they still have a week. But we should be a lot lower than where we're now. The last numbers was on Wednesday last week. They're still at basically 8 trillion 900. So do the maths. They've only lowered it by 15 billion, and they should have done 45 in June. Yes, they can do all the rest in this last week or the last 10 days of July, but it's highly unlikely. So that guy was right. They're not, they're not being straight, the Federal Reserve, nor the Bank of England, of course. And we'll go to the ECB now, because people have asked me about what this TPI is. Let's see what it stands for again. ECB TPI. And they use these terms just to embellish it. Instead of just saying, they're going to do QE to infinity in order to save Italy and the other peripheral markets. Well, it means the transmission protection instrument. You figure out what that is. It's basically trying to protect the weaker countries and their bond markets. So Grady here on Twitter said, the QE renaming contest goes on. Yesterday it was the ECB with the new unlimited TPI. Can Fed counter this without revealing pivot 180? Central banks are hiking rates and tapering into a slowing economy, but launching new unlimited QE concepts while fighting inflation. Yeah, sure you are. We've said this many times in the last, forever, that once you go down this route of inflating the system of QE, money printing, debt monetization, you can't stop unless you want everything to implode. And why do I think that, and why am I so certain of that? Well, because I've looked back at history when countries have done the same, and they've been unable to stop the inflation. You look back at France in the 1790s. Read the book Fiat Money, Inflation in France, and you see why, by Andrew Dixon White. There will be a link in the description if you haven't read it yet. Free PDF. Read about Germany in the 20s as well. They started debt monetization during World War I. Yes, they had the reparations after the war, but it was just a continuation, and they couldn't stop, and eventually their currency collapsed. And in France, the assignats collapsed. And the process is similar every time, and it's similar now. Every time there's a problem, a crisis, they have to come back with even more stimulus, monetary and fiscal. And they always keep saying, this is the last time we're going to normalize everything. And they can't. And what I've been talking about today is just proof that they can't normalize things. And it's going to get worse in terms of the currency debasement, and eventually the dollar and all fiat currencies are going to collapse. Maybe not the ruble. Maybe the ruble is jumping off the fiat currency while the dollar ship. I don't think they have any more dollar reserves. If they had some, it's been confiscated. They're focusing on gold, commodities. Not too sure what's going to happen to China, but I think they'll be okay. But it's very disruptive, and I think it's showing in China already. I don't think anyone will be that safe when the major reserve currency dies. And that doesn't mean there won't be a dollar in the future. It will just mean that we'll probably have a reset. The dollar will be, probably they will lop some zeros off it or whatever. But the only way to fix a currency system after it collapses is to go back to sound money, i.e. gold and silver. Whether they'll do that, I'm not sure. They could try to sell digital currencies to you, but don't buy into it, because unless it has some real monetary asset backing it, it will be no good. It might survive for a few years, but pretty soon people will wake up. And with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. I spoke yesterday as well in my live stream about the situation on COMEX as it pertains to the commitment of traders for the bullion banks in gold and silver. I'm not going to go over it here. You can watch my live stream, and I spoke about it. And Rafi Faber as well, he's on YouTube. Check his YouTube channel. He's done a really good video on it. I'm going to put it up in the cards as well. So right now we've got spot gold, 1726.50. It's down $1, so pretty steady. High's been 1729, low 1719. Silver is up 3 cents at 1862. High's been 1866. Low has been 1840. The Dow futures down 14 points. NASDAQ is up 6. S&P futures down 1 point. So fairly quiet, the markets right now. FTSE is down 30 at 72.55. Euro Stoxx 50 is down 8. To the currencies, sterling is down 0.1% at 119.93. The euro is down also 0.1 at 102.01. The dollar is up 0.25% versus the yen at 136.37, and the dollar is up 0.33% versus the Swiss franc at 96.44. Dollar is unchanged versus the Chinese yuan at 6.75. And talking about the Chinese yuan, I saw this morning something out of Crest Capital and Tavi Costa. Look at this. I think the Chinese consumer confidence is collapsing. That's not a good sign either for the world economy, or the US for that matter. It's probably showing you as well that the US is not buying as much from China. So let's check out the ruble, see where it is this morning. Dollar is up just under 1%. It's at 57.20 versus the ruble. Back to the other currencies here. We got the Aussie dollar unchanged, 69.21. The dollar is up slightly versus the Canadian dollar, 129.20. And the Kiwi dollar is down 0.2 at 62.40. General commodities, WTI crude down just over 1%, 93.20. Brent is down 1.3 at 97.78. High grade copper is up 0.2% at 3.35. And the US nat gas is up 0.33% at 8.23. To finish off, let's look at the 10-year yield. So yeah, this market's still being manipulated by the Fed. The Fed is not doing what it said it was going to do back in May. So yields would probably be a lot higher right now if it wasn't for the Fed not selling treasuries. The 10-year right now is at 280. It's up, well, 279 really. It's up 1 basis point. And the 2-year yield is up 2 basis points at 3%. So yeah, curve is still inverted by about 21 basis points. So that's telling us recession dead ahead. It always happens historically. Back in 2019 when it happened, the inverted yield curve, people said, oh, it's different this time. And it wasn't, because we had a recession in 2020, a very sharp one for that matter. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great start to the week. Take care. Bye.